On the Business Courier front page centerpiece this week, Cincinnati's apartment boom shows no signs of slowing down. With the highest occupancy rates in 17 years, people are paying to be on a waiting list, and the search for an apartment is becoming a game of for rent, you wish. Across greater Cincinnati, apartment occupancy rates are above 94%. More than 3,000 units are expected to be delivered this year, and construction of additional Class A apartments, which are typically high-end units with top-of-the-line materials and upscale amenities, is not expected to slow in 2017. All of this development is a huge boost to the Cincinnati economy. The apartments under construction represent more than $370 million in investment. The projects that have been proposed or are in development total about $500 million. That means hundreds of millions of dollars in construction wages, as well as millions spent with local engineering and architecture firms, additional full-time jobs, and higher property values. Downtown has the most units under construction, but other parts of the region are seeing an influx of apartments as well. And Cincinnati's apartment building boom is just getting started. Business Courier reporter Tom Denveropolis wrote this story and joins editor Rob Dawmeyer in the studio with more. Tom and Rob.
Peg, thanks very much. Tom, thank you for being here. So Peg mentioned this, the apartment building boom has been going on here for a number of years now. You'd think that we'd be reaching a saturation point, but why are developers still interested in building more?
You know, there are a lot of factors that apartment developers look at when they make a decision to build new apartments, and they want to see these signs are healthy. Well, those are job growth. We've got healthy job growth. They want to see new household formations. That's millennials moving out of their parents' house or moving out of apartments that they're renting with friends. They want to see rental growth, which we're finally seeing. Real rental growth rates are up about 5% last year, and they want to see high occupancy rates. They're at near a historic high for the Cincinnati market, so all those factors point to now is a good time for additional supply.
So when I think about new apartment construction, in my mind's eye, I have, you know, out in the suburbs, pretty giant complex. Maybe it's a bunch of outbuildings, maybe it's not, but it's definitely sort of its own place in the middle of nowhere. Is that what they're building?
Yeah, that's really not what we're seeing. There's a few of those projects in the market, but the vast majority of what we're seeing in Cincinnati are kind of urban style developments, whether they're in downtown Cincinnati or over the Rhine, or even in other areas, even like in Westchester and Newport. You're seeing these urban style apartments that really connect to the broader community, and they are really close to amenities. They're within walking distance a lot of times of a bike path or the river or a shopping center or a grocery store. So it's really the developers are looking for sites that they can build a community around the apartment.
So in your story here, you have a chart of the number of units built over the last, God, I think it's 20 years, and it's a really dramatic swing. And even into next year, it's showing that there's going to be a whole lot of units built. What should we expect to see after that?
After that, it's a little harder to tell, but from talking with the developers, they're out looking for more sites. They really want to find additional opportunities for apartments. They think that, and compared to other markets our size, we're not building nearly as many units as Columbus or Indianapolis, so they see a little bit more room for this to continue to run beyond 2017 into 18 and beyond.
Gotcha. Great story. Thanks so much for being here.
Thank you.